What's going on? Time for a little bit of a recap. YouTube, let's talk about this morning coming up to the FOMC. Not really expecting too crazy of a move, but we had a really good reversal. Macro still short biased. This morning went long biased. So let's kind of get into it here. So on the gap on SPY, we had this morning posted on Twitter here a little bit before it happened, a little bit before data. So you know me, I like to look for these gaps, especially in the futures. 1 minute said gap on the SPY, obviously. Yes, we trade futures every day. Looking perfect for a free short scalp. And this was coming into data, right? We had big employment data. PCE was hot, so that was garbage. So kind of figured it would follow suit and kind of head back down. And that bias confirmed itself by leaving some gaps open right here to leading into earnings. So I was short up here, and I just had my orders filled right here and set for that. I did not expect the data dump to go flying so far as it did, but it was great because it did end up for another long move. So we did call that nice little short there. And then if you look at the end of the day, you can see that trade I'm talking about right here that we just went over, short the top and then fill that. Here's the gap right there. So of course there's a lot of downside miss, but you don't want to gamble through data. Regardless if this move would have went long, it would have came back down, filled that gap and then went higher, or plummeted through and continued lower. So regardless, this gap was going to get filled either way, whether long or short. So the best bet is to just place your orders at that gap and let it do whatever it wants after. Now, as you can see, we walked up to a decent little PNL here. There's like 8,000 something today. And you can see all the ins and outs. So after the dump right here, we had started getting some nice long scalping going on. So we created some higher lows and higher highs, did a couple long scalps here, let it reverse down to these higher low, higher segments. And then you can see me long here, out, long here, out, long here, and out. So a lot of big back and forth trades there. Started a few more short, a few more long. I mean, I'm not going to get in every single itty bitty little trade in between there, but a lot of different scalps and netted us some decent green. So we had a good opportunity. So let's get it dissect a little bit more about what happened today and how we decided we were going to look at today, right? So my micro in the short term here, I wanted to see something bump up to at least like the 1618 yesterday's highs, or even the top algo at the earliest. And I'll explain what I'm talking about here. So every time we get a data candle, right, in the pre-market, I usually like to fib that data out if it's a really big mover, and then utilize the Fibonacci sequence from there. So like always, let's do this. 5 minute high low. There's your fib box, as we'd like to do. And I have it pointed to the downside because macro, I'm obviously still short. So let's talk a few things about the intraday, and then we'll go to the macro about these leading moving averages on the daily and how they shied. We'll get into that in a minute. So the box on the high-low 5, there we go for data, and our golden pocket, which is one step and below or above, one leg below or above our 50. So 38.20 and 61.8 always. Now, I bought this dip right here. As you've seen, I ran it back up, but I wanted to just get to the golden pocket, right? So something that created a new candle inside. This is what happens all the time on our weekly as well. So this box, if nothing is underneath this box or follow through price action, we will get inside the box and above the candle close. So the 5 minute candle right here will be above that close, and we'll usually retrace 50%, and that'll be the golden pocket. So you went long into here, pushing into the golden pocket of the fib, and then we wait for digestion and what happens next. So we went long all the way to, I said about the 200 SMA and the top. And of course, I was playing some NQs here. So NQ did play out a little bit better than the SPY today, because when I went long in the pre from NQ, same exact thing here, box, anything above yesterday's close, and all the way to the top of the box, 100 fib. Now, this one went a little bit above, hit that 205 minutes, so on and so forth. And SPY had a little bit of a lag into the day, but either way, we knocked out 50 some points on this one. Really handy. So back to the downside on SPY here, we missed it by like a point and a half, one and a half ticks, and that was our target. And then I wanted to see if it would boost back up to that 50 prior to FOMC, or whatever it happens want to do prior to the really big data day. And usually we don't get too much of a sweep like this prior to FOMC, but I mean, like I said, earnings season's coming up, and if we have some shakes from AMD, Amazon coming up, and as we're plowing through earnings, we're going to get massive moves. It's not going to be like a regular FOMC. A couple different things that I did hint at too. We had a 5 minute 666 simple moving average tag catch up yesterday, because yesterday I said we were going to have a burn day. We're going to have a zero momentum day. We had no ups, no downs, just really sideways. And it came back down to this weekly 38.20 and the 666 5 minute. And noticeably, we opened up underneath, pushing into that 666 today to confirm that downside as well. And I wanted to see that on SPY. So we are coming into the final leg down here, it looks like, of the day. We're coming into that 2618. I have a feeling that we're going to just kind of continue that short as we are macro short. And let's talk a little bit about the long-standing daily moving averages and the weekly and what happened last week. So for our moving macros, our big boys here, right? Let's get to a nice fresh chart here. So what we like to see, generally speaking, for moving average shying is something that happens a ton. Intraday, long-standing time frames, doesn't matter which way you're at. But when the price action shies away from a moving average or a really big price level, you can expect the abrupt reversal of that direction. So when we finally broke through the 50 SMA and it started coming down, generally we target the 100 EMA, right? Through the 50 SMA here in the dash red, I target the 100 EMA. And that would be our next point. Now, you shied it and did not hit it here, and we are still surrounded by seller volume, right? We are seller in control. So I said we'll bounce from the 100 EMA, generally go back to the 50, create a lower high, reshort, and come back down to the 100 EMA target. Well, so on and so forth, we did. I don't think we're going to go much further today because our rule for gaps is our first gap tag does not fill. So right now, you're going to get that last little bit to the 2618. It's going to stop before filling this gap. And on the daily, and that'll be about the bottom of the day. I think we're just going to go sideways and just kind of mess around for the last of the day today. So 2618 to that downside, we are coming up there as we just showed you from those fibs. And that's going to be very close to this 10 SMA daily. So we got a lot of big volume profiles coming in here too, but maybe just a smidge lower, then it'll probably pick back up. But it most likely, higher percentile chance will not fill this daily gap yet on the SPY. So that nets us for a follow through tomorrow into FMC, which is major volatility, and that can cause us to have that big abrupt. Now, depending what AMD, Amazon wants to do after hours for the earnings and whatnot, doesn't really matter too much. I'm staying to the technical side of shying the 100 EMA. Then you notice right here, it shied the 50. So two things have to happen. One of these moving averages need to be tagged, and this gap needs to be filled. Okay. So despite if Amazon, AMD tomorrow pushes it back up in the morning and it tags the 50, and then the FOMC drains it and comes back down to the 100, totally possible. If we open up tomorrow and we have a double gap where Amazon and AMD failed and we left a gap open here and here, so this becomes a double gap, we open up underneath or way down by the 100 EMA, we get an actual 100 EMA tag, and that would be a bounce point near there for very temporary support intraday, because again, we shied it and we need a magnet to hit this or the 50 SMA moving average. So despite what these earnings do in the FOMC, we're going to see some crazy volatility coming into that. So our prediction here with what we're looking for following through is going to be these weekly Fibonacci points, right? Get back to our chart for that one. And the big weekly Fibonacci points that we had picked the top of the market with here, we are just going to watch on the follow through, and that's it. So we did fill this gap back here, remember? And that was our target. Once we hold the 0, can back all the way back up to the 100, which it did, fell back inside, and now we can get out of that range and set up a new weekly to the downside. And that is the last week for me, right? So if I go to the weekly chart, last but not least, just to see if you guys are paying attention last week, it's the same jam. So if I go to this guy here, nope, that's our big one, volume profile. So if we get rid of these intraday fibs we're running with, remember this one. So this weekly right here was the big downsided point of interest. And last week we went long. Again, like I said, the retraces is not if, it's when, especially inside. Treat this the same as we do our algo boxes. And look at this huge engulfing week. We call that the box. If we are not outside the box in the 100 and trending and coming down to our next target of the Fibonacci, we're going to retrace what? To the 50, right? So we had a nice free long last week. Anything over 495.22 could come back to the golden pocket, like always, 38.20 right here, 507.50s, and so on and so forth. Now, we had a couple different, actionable days there on the daily chart, and we still are looking for that that trend to continue, lower high and continue, but nothing goes in a straight line, right? So we need some catalyst, headline, world news, FOMC, you name it, something to bring us to that catalyst watch. And today we got a little bit, and I think there's some fear in earnings coming up at AMD, NVIDIA. You got Apple joining the AI. You got a lot of news spread out. But right now, technical analysis is still playing out very good. So I say no more downside today, maybe a little bit as far as no gap fill, but this is about the bottom above 504. We're not going to fill that daily gap. Is my guess. We're going to come back up here for the rest of the day, just kind of chill, and then tomorrow is the big day. We're going to see 100 EMA, 50, the gap. All three of those big three are going to come into play, and we'll talk about the confirmation leading into those and how to play them. So stay tuned for the next, and we'll get you caught up with our predictions tomorrow morning. Take care.